Good. So we look at we are looking at final accounts with adjustments. And this is premised on the fact that we have prepared final accounts. And I said at this level, there are two main accounts that we are concerned with. And that is a trading profit and loss account. And the other one, this thing is making a lot of noise. Let me find a way around this. Find a way around this. Must be a way. Good. Let me see if I'm able to get some work. I'm looking for the classwork example that I sent. Classwork examples that I sent on Saturday. You must have received some document. You must have received some document which was to be used today, right? Class practice questions. We may not be able to cover all. So probably we'll have time to do one example. I expect to be a bit comprehensive in coverage. And then once we do one example, I'll expect you to go and tackle the rest, because you are well able. You're well able to do that. You're well able to do that. Let me see this. I am not sharing the screen yet. I am not sharing the screen yet. I'm not sharing the screen yet. We'll know what to share. I will know what to share. Good. You should be able to see my screen now, right? I hope you're able to see my screen. You can confirm. You can confirm whether you're able to see my screen. You can confirm whether you're able to see my screen. Can someone confirm that you're able to see the screen? Is it clear? Is my screen clear? Yes, yes, yes. Good. Now, final accounts with the adjustments. Final accounts adjustment or with adjustments. Now, it is important for us to note that if you look at the example that I gave, let me see whether there is a new share here. Just look at the example, one of the examples that I gave. Account with adjustments, class practice questions. Now, if you look at this example that I gave, in the normal example that we tackle, we only have the trial balance, right? Up to there. But down here, there is a list of transactions that has been written, adjustments or additional information. You'll find it is written adjustment or additional information. You look here, there is additional information. You go down here, there is additional information. You go down there, there is what we call additional or further information, right? Which means what that means is that this information has not been captured in these numbers that we have in the trial balance. And therefore, what is expected of us is to read each and every additional information and establish how it affects both the trading profit and loss account and the balance sheet. There are some that will only affect the trading. There are some that will affect both the trading and the balance sheet. And there are others again that will only affect the balance sheet. And therefore, it is upon you as an accountant to establish what additional information affect your preparation of the trading profit and loss account and what will affect the balance sheet, right? And then as you prepare the trading profit and loss account, you are supposed to put in those adjustments or to factor in those adjustments. But now to assist us in looking at those adjustments is what I had put here as a final account adjustment. And one of the items that I've written here is what we call accruals and prepayments. Accruals and prepayment. Now, again, here, if you're keen, you remember that when you are starting learning the unit, there are things that we looked at and called principles and concepts, right? Principles and concepts. We are going to apply them when we are dealing with these things. I am very sure there was an accrual concept, right? There was an accrual concept. When we say that, where we said that revenues and expenses must be recognized when they are earned, stroke, incurred, and not when money is received or paid. Can we remember that? Expenses or costs. I want to hope that the screen is okay, that you're able to see what is on the screen, right? Should be able to see what is on the screen. Now, what is wrong with you people? Deborah, why would you, one of those people who can't access the DS portal and you're already here? What is important first? Concentrate with what we are doing. Other things will come later. Because even if you are not able to access, learning must continue. You will be able to access that portal later, right? So first things first, it is time for class now. All those other things can wait. Yeah, good. I want to hope that you're able to, good, somebody has confirmed they are able to see the screen. Thank you, thank you, thank you, thank you, thank you, thank you, thank you. You're able to see the screen, asante. Now, you remember we talked about the principles and the concept. It would be important if you revisit that work. Because one of which we covered was revenues and expenses must be recognized when they are earned or incurred, not when money is received or paid. The reason for this is we want, for example, to establish the profit for 2019. Yeah. If you want to recognize the profit that a business made in 2019, you must remember that there were probably transactions for 2018, some for 2017, some for 2010 that might have been paid in 2019, right? So sometimes people take a long time to pay. I am very sure that some of you will even, there are some who can complete their studies without paying fees. Every time you go to the office to say, hey, I will do this, you pay late, right? So the last semester you pay late, right? And then you are left with that balance that you don't want to clear it until when you are coming for your certificate 3 years or 2 years later, right? So what we are saying is, in any given business, for example, if we look at the year 20, we are in year 2020. And for example, if your work is to sell some items, let's say household items, there are those people will come to you and they buy on credit. And they will not pay that money until this year lapses and we are in 2021, right? When they pay, they will pay in 2021. That money that will be paid in 2021 does not belong to 2021. It belongs to year 2020. True or false? It belongs to the year 2020, and therefore it must be accounted for in year 2020. That's why we are saying we account for it, not when we receive it, because receiving might come 2 years or 3 years or 10 years from now. But we account for it when we earn it. And earning means we have sold. When we have sold, whether it is on credit or on in cash, we have earned that money. Whether it is paid today or next year or 20 years to come, we have earned that money. And that money must be, in accounting, accrual concept tells us that it must be accounted for in the year that it was earned, not in the year that it will be received. The same case for payments or expenses. That expenses must be incurred, must be accounted for on the time or years or periods that they were incurred, not on the period that they will be paid. Because sometimes, for example, you might decide to buy stock, purchase stock on credit for year 2020. That is the stock. And that stock will help us generate sales, right? And therefore, it will only be prudent if we account for it now, even though we have not paid. Even if we paid 2021 and pay for it or pay for it 10 years from now, it belongs to this year because it was used this year to generate what? Sales. And that is where the issues of accrual comes in. Accrual concept, where we say that revenues must be recognized and accounted for when they are earned, and expenses or cost must be accounted for when they are incurred and not when the actual payment or receipt is received. Because we want to match them with the year in which they help us generate revenues, right? So that we know what amount of money, what amount of profit or loss did we incur in that particular year. Is that concept clear? Now, I will break this into two. One, we have what we call accrual and prepayments. Accrual, let me put it this way here. Now, accruals are revenues and or expenses incurred which impact companies' net income on the financial statement. Although the cash related to those transactions as or is yet to be paid or to change hands. Is it making sense? I want to know whether it is making sense. That accruals can either be an income. When it is an income, it will be called accrued income, or it can be an expense. And when it is an expense, it will be called accrued expenses, right? Accrued income means we have worked for that money, but it has not been paid to us. For example, if you worked for a company in January this year, and they have not paid you that money, right? It is still your money, right? And therefore, that is the amount we are calling what? Accrued what? Income. This is the income that relates to the current year, but cash has not yet been received. And therefore, this income must be reported in the profit and loss account. It must be reported in the profit and loss account. And again, it must be shown in the balance sheet as an asset. It must be shown in the balance sheet as an asset. But if accrual is an income, is an expense, then we say that an accrued expense is an expense that is payable or due for payment, but has not been paid during the year. For example, we have some bills. We have utilized electricity for January and we have not cleared that bill. That is an expense, right? We have not paid the actual money, but we utilized electricity to help us generate income. And therefore, we call it an accrued expense, or it can also be called outstanding expense. Outstanding expenses, which means it is yet to be paid. Now, accrued expense must be charged to the P&L, profit and loss account, and it must also be shown in the balance sheet as a current liability. It must be shown in the balance sheet as current liability. That is about accruals. We look at prepayments. When it comes to prepayment, it can either again be an income, in which case we call it prepaid income, or it can be an expense, in which case it will be called prepaid expense. Now, a prepaid income is an income that is not yet due, but cash has been received for it. An income that is not yet due, but cash has been received for it. For example, if we are renting out some apartments, yeah, and we are in September, and our client comes to us and pay the rent for October, November, and December all at once. No, that money that has been paid has not been earned. It is yet to be earned, but we have already received it. It's only that we have received it in advance. That is money that we call prepaid income or advanced income or income in advance, right? Called prepaid or income in advance. So therefore, these terms should be noted carefully. It should be noted carefully. Good, we have said that. Now that amount cannot be reported in the current year. You cannot report, whether even if you have received it in September, when you're doing your financials for September, you cannot report it in September. It cannot help you in coming up with the profit and loss account or deciding whether you made a profit or a loss. And therefore, if it is included in any of the figure, it must be subtracted from it because it has not been utilized. It has not been utilized. We only received money. It's like a debt that has been given to us. We have not rendered the service, right? It cannot be reported in the current financial year. And therefore, if it is affecting if it is in the additional information, then you should be able to adjust the relevant elements in the trial balance. Now, if it is received in advance, it must be shown in as a current liability. It must be shown as a current liability in the balance sheet. And of course, you'll have to adjust the P&L. You will have to adjust the P&L if it is affected. Then we also have what we call prepaid expenses. We have prepaid expenses. Now, a prepaid expense is an expense that is not payable, but cash has already been paid, right? It is not due. It is not due. It is not due. Let me put additional here, due. It is not due for payment, but cash has already been paid. It is the opposite of prepaid income, right? For example, we are supposed to pay for electricity every year, right? Or every month. If again you pay for October, November, and December, and we are in September, you will have paid that money in advance, right? It is not due for payment, but you have already paid it, right? You can also call it expenses in advance. Expenses in advance. You've paid it, yet you have not utilized that money. It will be utilized in future. That is called a prepaid expense. And a prepaid expense, you need to again adjust the profit and loss account because you cannot include it as an expense for the current year because you have not utilized it. And again, it must be shown in the balance sheet as a current asset because it is an asset. It is the same as deciding to remain with that money in your bank account or in cash, right? If it is in cash, then it is an asset. So when you pay it and you have not utilized it, you just paid it in advance, it is still an asset. It is still an asset. I want to hope that that is clear. We'll come to see these things later. I don't want to deal with this example here. I don't want to deal with that example there. I don't want to deal with that example there. Let me see what else is here. Good. We have part debts. We have then what we call accounting for bad and doubtful debts. Accounting for bad and doubtful debts. Now, I want to be again very simple in explaining this because it is important for you to understand. It will be very important for you to understand how these things arise. So when you do a sale or when you sell, you will either sell in cash, right? You can either sell in cash or you can sell on credit, right? Let me try and demonstrate this. You can either sell in cash or on credit. When you sell in cash, you get your money. You're paid in cash, and that is done. But when you sell on credit, it means that you've given out your goods and probably the payments will come in later, right? Payments will come in later. Now, out of practice, it has been discovered that those people you sell to on credit can either pay you, right, later as agreed, or they can refuse to pay you. So we can have an amount that is paid or an amount that is not paid. You can have an amount that is paid or an amount that is not paid. Of course, not paid again will be for many reasons. For some, it is refusal to pay. And for others, probably it is inability to pay, right? Out of this amount that is not paid, out of that amount that is not paid, probably some will be paid in future and some will never pay you, right? Depending with the reason. I hope that is clear. And I think it's also important to mention that when we sell on credit, we create people we call, can remind us that when we sell on credit, there are a group of people we create. And when we create them, we call them debtors, right? When we create these people, we call them debtors. When we sell on credit, we create debtors, right? We create debtors. And out of those debtors, there are some who will pay us and some will never pay, right? Tunaunda nini, deni, mnaita deni kwa lugha ya Kiswahili. Wengine watakulipa, wengine hawatakulipa, sababu ni tofauti, right? For different reasons. Now, in accounting, out of these people, there are those people who will never pay. If people never pay, let me again put it fair. Those people who never pay, that amount is referred to as bad debts. That amount will be referred to as bad debts. If it will never be paid, it will be referred to as bad debts, right? Referred to as bad debts. If there is a likelihood that it will be paid, if there is a likelihood that it will be paid one time or another, these people will be classified as doubtful debts. You have doubts concerning them. You have doubts concerning them. I want to know whether that is clear. I want to know whether that is clear or whether you need me to shed light on anything. So respond on the chat. Respond on the chat. Very clear, sir. Clear. Good. Hii ni watu wangu nataka kuwapeleka na Rieng, eh? Mambo ni Rieng. So that we understand each other. No, your success and failure is my responsibility. I must ensure that you pass. Iko sawa? Iko sawa. Mbele iko sawa. Very clear, eh? Like that. Ensure you don't get confused. Because people struggle with these small issues that we've talked about here. And they struggle until they complete their degree. And they go take them to the workplaces. Right? Struggles. So I hope you are clear. I hope we are clear on that. That this, whatever I've explained here, is very clear, the issues of bad debts and doubtful debts. Now, let me also say this, and listen carefully. In the normal accounting process, if you remember on the accounting concept that we covered sometimes back, we talked about being prudent. Did you talk about prudential concept? Right? Did we talk about, let me put it in a different way. Revenue recognition, being prudent, right? In ensuring that we don't overestimate our profit, right? I know you remember. I know you remember us talking about it. And therefore, because of being prudent and wanting not to overstate our profit or understate our profit, it is a culture, it is a norm that if you notice that there are some debts that are likely not to be paid, If you notice that there are some debts that are likely not to be paid, that is what we're calling doubtful debts, that it is important for you to note them, right? It is important for you to note them and probably subtract them from the total debtors so that the figure that you have in the total debtors is realistic, right? So that the figure that you have there is realistic. So we subtract them from debtors, not creditors. They are doubtful debts, you subtract them from the debtors, and in the balance sheet, of course, you will take the net figure. We'll be tackling examples, and they will give us a better understanding. Yeah, they'll give us a better understanding so that now when you come to read these notes, you will have a better understanding. You can see here, this is an illustration. This is an illustration here. Illustration here, where you have debtors, you subtract bad debts, right? Completely, because these are bad debts written off, right? Are written off. Then you get the net balance there. Then you subtract specific and general provision to get the amount that goes to the balance sheet. Now, bad debts or bad debts item must go to what we call P&L, right? It must go to what we call P&L, and it must go there as an expense. Bad debts must go to P&L as an expense. When it comes to doubtful debts, you are supposed to calculate and know whether the doubtful debts that we provide for this year are more or they are less than the doubtful debts that were there last year, right? You calculate and see whether they are more or less than the ones that were there last year. If they are more, then it will go to P&L as an expense. It will go to P&L as an expense. If they are less than the ones that were there last year, the difference will go to P&L as a revenue. It will go to P&L as a revenue. I also want to confirm whether that is clear. Is it clear? No, bad debts written off. Why would you say written off, recovered? They are not the same. Duncan, these are not the same. These bad debts I've demonstrated here. These bad debts, we have said that people will never pay, right? If they will never pay, then you must subtract this amount from the profit that you make so that you know the correct profit that you made. If they will never pay, so bad debts written off, otherwise written as W/O. Bad debts written off. This is an expense. If you recover, if these people change their mind, or if their circumstances change in future, and they decide to pay you, then it becomes an income to you, right? It will be added to gross profit. It becomes an income because you had subtracted it. It becomes an income and should be added to gross profit. So bad debts written off and the bad debts recovered are two different issues. What are those provisions? What provision are you talking about? To provide means that you take some monies from your profit and cover this loss. That is what we call provision. Or we know, Felix. That is what we call provision. Take money from the profit that you have earned and offset the loss that you've gotten or that you are likely to get. That is what we call provision. And I've said, who is this? This is Onesimus. I have said, for bad debts, you subtract them directly, they become a part of expense. Bad debt written off, you classify them together with expenses on the P&L, right? But if they are doubtful debts, there are two things that you need to clarify and to check. If you compare them to the debts, doubtful debts for the preceding year or the year that is before, right? Because there must have been doubtful debt then. And now you have been told to provide a different percentage, for example, because depending with the times that you are in, for example, at this time of Corona, do you think those people who had debts are likely to pay or they are not likely to pay? Those people who are not likely to pay will increase. And therefore, you must be able to capture that as an accountant in your financial statement, that there is an increase of people who are not likely to pay. And therefore, if that increase is there, if the doubtful debts for this year are more than those for last year, then that must be taken into the PL as an expense. However, if, for example, the economic conditions have improved, like in 2021, they will improve, and then you realize that the doubtful debts that you have in 2021 are less than the one that were there in 2019, that difference must be taken in the P&L as an income, and therefore must be added. It must be added to the gross profit. Now, I will not repeat that. You might not be able to get all these things. You might not be able to get all of them until we do it practically for you to be able to understand what we are talking about. When we do it practically, maybe it will be easier for you. It will be easier for you. Dealt with the provision that I've given extensive examples here. Good. The other thing that I want to talk about, and though probably this will be the last before we look at an example, is what we call depreciation. It is what we call depreciation. And for now, I know there are people who don't understand what depreciation means. Others already know what it means. And for now, I want to be very simple. If you buy a phone today, if you buy a phone, no, not today, if you bought a phone last year and you bought that phone at 20,000, would you be able to sell it today at the same amount? Will you? Will you be able to sell it today at 20,000? And you bought it last year at 20,000 and you have already used it. Is it practical for you to be able to sell it at 20,000 this year? No, no. And the reason is it has depreciated in value. The value of the phone has gone down. The value of that phone has gone down. And therefore, that is what we call depreciation. And depreciation will affect, majorly it will affect assets. And it will affect the category of assets that we call non-current assets or fixed assets. That is the major class of asset that will be affected by depreciation. Remember, companies will have many assets. They may have cars, right? They may have machines. They may have fixtures. they may have fittings, they may have electronics, right, as part of their assets. And once those assets are bought, you don't expect their value to remain constant throughout. And therefore, as an accountant, when you are reporting, it is always prudent when you adjust and try to estimate the value of that asset in the year of reporting. You must always try to adjust by establishing the value of that asset in the year of reporting. And that, of course, will be done, for example, if it is a motor vehicle, and you have been told that the depreciation rate is 10%, it was bought last year. If the depreciation rate was 10% per year, then it means that this year you will reduce the cost of that asset by 10%. So whatever will appear in your balance sheet as net book value will be the cost minus 10%. Or we know, Felix, that is very rare. That is very rare. But if there is appreciation, then it can be considered to be an income. But it is very rare for that to happen. Very rare for that to happen. Good. I don't want to go into the details first of telling you that, when it is this maintain, debit, depreciate, depreciation account, do this, because these things will confuse you. I want us to do an example so that when you tackle an example, then when you go back to tackling or reading through, you'll be able to understand why we did what we did. That is what is very important for us at this time. I hope that is clear. If it is clear, I want to give you 2 minutes so that you can refer to example. Is it number 4? There was an example number 4. Kindly confirm if there is an illustration number 4 and what it is about. Confirm illustration number 4, whether it is that for David Dolgelao. David Dolgelao. David Dolgelao. Confirm that that is the example or illustration number 4 from the work that I sent. I sent some document on Saturday, and I said you either photocopy it or print it, or you write it, those illustration in your book. So I want us to consider that illustration number 4. I want you to consider illustration number 4. I'll take 1 minute and then we continue. I hope that is clear. Who is saying that some of you cannot access because of the portal? It has nothing to do with the portal. I sent this example in WhatsApp, not even in portal. Who telling me you cannot access? What does this looks like you are not a serious person, Gitonga. It looks like you are not a serious person. I didn't send this via portal. I sent this via WhatsApp, not via portal. So when you tell me you cannot access because of the portal, it leaves me with a lot of questions. A lot of questions. It leaves me with a lot of questions. Can you establish whether you have that one for David? Can you establish whether you have that one for David? And if you don't have, if you deleted, because some of you never read those messages, ask your friends to forward for you. You should be able to have it. I want it copied down somewhere. Either you copied or you have a printed copy. And then I said I'll take 1 minute. When I come back, we embark on it. And therefore, if you're okay, you can start preparing the trading profit and loss account. You can start preparing the trading profit and loss account. Very, very fast. Trading profit and loss account. Very, very fast. Good people, are we on the same page now? By now I know you should be able to prepare your accounts, right? By now you should be able to prepare your accounts. And I'm wondering whether to continue with what I have here, or do you want us to do it together? Yeah, can as well do it together. That is exactly what is there. Allow me to post this, and then to do with all these transactions. Good, very good. Oh, yeah. Counting is very interesting. That we don't struggle. Confirm that you're able to see my Excel. Confirm that you're able to see my Excel. Confirm you're able to see my Excel. Yes, you're able to see my Excel. So I want us to proceed very fast. Very fast. So give me the amount of sales. The amount of sales. Try and readjust this so that we move along together. Good, 378, 500. So I'll put it there. Now, I must emphasize this. You know, I give you some format. Those formats are very important. And I don't expect any one of you to use a different format rather than the one that I give in class. That is what should be adhered to, right? Sales return, very fast. I want us to do this very fast. Sales return. Someone give us sales return. Thank you, 41. So less sales return, that is 4100. We less sales return of 4100. And we get what we call net sales. Look at it. I am doing it on the third column. I am doing it on the third column. And therefore, that is what I expect without exception. All of us should be able to do it that way. That one is done on that third column, right? Good. Opening stock. Opening stock is, what's the opening stock? Very fast, very fast. Someone identify, yes, 120, 600. Opening stock, 120, 600. No, I said we are learning. This is the method that I'm using. Don't use the T format. This is the method that I'm using. Don't use the T format. Don't use the T format. Tafadhali. Don't use the T format. Don't use the T format. Good. We put that on the second column. We put that on the second column. You must be able to note that. Then purchases. Purchases, amount of purchases. Amount of purchases to 61,700. To 61,700. Then we have less purchases return. purchases return or return outwards. Less purchases return or return outwards. That is 7,700. Thank you. When you less that, when you do that, you're supposed to get what we call cost of goods available. Sorry, you're supposed to get a figure here that you put here at 254, right? You get that figure of net purchases of 254. Look at where I have placed it. Look at where I have placed it. On the same line with this other, but I've put a line there to show that it is an addition or subtraction here. So 254. Then the 254 is added together with the opening stock to form what? To form what we call COGS, or cost of goods available for sale. Cost of goods available for sale, which is 374. Therefore, another line there on the second line, second column, right? From there, or from this figure of cost of goods available for sale, I'm supposed to less closing stock. Closing stock. So it is the same as the cost of goods sold. Available closing stock is 102, 500. 102, 500. If I do that, I'll get another figure that I will call and put here. Remember, one line down here on the third column, there is a purpose for that. There is a purpose for that. So the figure is 272, 100. I will put it there, 272, 100, so that I am able to label that figure as the cost of sales. I'm able to label that figure as the cost of sales. I hope we are together up to that point. Those are things that you should be able to do. And therefore, from there, I'm able to extract my gross profit, which will be equal to this figure of net sales minus this figure of cost of sales, right? To get my gross profit or as 102,300. 102,300. Are we together up to that point? Good. Now, it is important for us to go to the additional information that you were given. Go to the additional information that was given there. If you look at that additional information, you will find there is closing stock of 102,500. Those people are still looking for closing stock. That is where we have gotten it. Then there is electricity charge accrued, there is advertising expenses accrued, there is insurance premium paid in advance, there is business rates prepaid, right? And then there is a depreciation, right? And there is bad and doubtful debts. All those items, I'm not sure, I think they are not affecting the trading trading profit and loss account as at now. But if we look among the information that we have gotten there, there are some items that we include here, like discount received. Can you see it? Discount received. Somebody give us the amount from the information from the trading profit, from the TB, trial balance. Can somebody give us the amount? It is 2,400, and therefore you add it there. Any other income? Any other income? We have rent received. Can you see it? We have another income of rents that we received. And therefore, you add that rent there again. When you do that, what you get will be equal to 112,200. It will be 112,200, right? 112,200. Then from there, we proceed. Less expenses. less expenses, so that we start listing the expenses. If you look at your TB, you will find that there is salaries, right? Salaries and wages. Can you see salaries and wages? What is the amount of salary and wages? 45,700. It is 45,700. Then you will go to the additional information and see whether there is any additional information affecting salaries and wages. Go to the additional information, establish whether there is any additional information affecting salaries and wages. Very fast, very fast. Look at the additional information. Establish whether there is any that is affecting salaries and wages. Should be faster than that. Should be faster than that. This is accounting, not a computer. Not computer science, computer studies. And the system logged me out. Oh, good. So we let me share this. Let me share the screen again so that we are able to proceed together. There is no item, and therefore there is no item there, and therefore we record expense for salary and wages. Let me put it here, salary and wages. We record there on the second column as 45,700. Do you see that? Do you see that? I need to help a fellow here. I need to help one of you here complaining. Good. The next one is office expenses. What was the amount of office expenses? Amount for office expenses. What was the amount? Office expenses, 84. Look at the additional information. Is there any other transaction affecting office expenses there in the additional information? Any other? No. So office expenses is recorded there, 8,400, right? Good. The next one is, can you see electricity? Can you see the electricity? Electricity. What amount is electricity on the trial balance? It is 1,600. Now you go and look at the additional information and establish whether there is any amount relating to electricity. Establish whether there is any amount relating to electricity. What is the amount? So electricity here we have 1,600, and then there is another amount there, 700, right? Is it 700? And what have we been told? That electricity charges accrued 700. What did we say about accrued? What did we say about accrued? What did we say about accrued? We must have said something. We have said, what have we said about accrued? This is an expense. It means that this year, this is what it means. Kindly note here, this is what this means. This year, we have so far paid 1,600 for electricity, right? But there is still an amount of 700, which is accrued or which is outstanding and has not been paid for, right? And therefore, that amount should be added to the amount that we have paid here or so far, so that we can know the total amount of money that we have paid for electricity this year. Is it making sense? And therefore, I expect an addition there, and the amount becomes 2,400 written there. I hope now it is making sense, because this is where we said that we should be looking at these things practically so that we understand. Is it 27 or 23? It is 23. 23, sorry. It is 2,300. 2,300. Thank you for correction, Nyabuto and who Shed Myth and Mwinzi Hall, Duambo Esther, for confirmation. We go to the next item, which is advertising expense. Advertising expense or expenses. What is the amount of advertising expenses in the trial balance? It is 84. And therefore, I will write there, first column, 84. I'll write 84 there. And kindly note, this is not an addition of these two, right? Addition of these two is written here, right? So this is different. Advertising expenses 84. Is it affected by the additional information? It is affected by the additional information. And in the additional information, we have been told that advertising expenses accrued amounted to 500. And therefore, that is the same as what we have done there before. We have dealt with the issue of accrual or accrued. And therefore, here we are adding, right? You add accrued. And when you add, you get 8,900. Thank you. Davis, Sid Davis and Nyabuto again. The next item is insurance premium. Insurance premium. The next item is insurance premium. What is the amount? From the TP&L is 31, right? 3,100. Kindly check whether it is affected by additional information. Check whether it is affected by additional information. Yes. And we have been told that advertising premium paid in advance was 900. Advertising premium paid in advance was 900. So what do we do here? What do we do? We have paid a total of that 100, but in it, there is an amount of 900 that has been paid in advance or prepaid. Good. This is Gitonga. Thank you. Thank you, Gitonga. And therefore, we less it to know the actual amount that relates to this year. We want to know the actual amount that relates to the current year. So less 900, what do you get? 2,200. I hope you're seeing the way I'm arranging them. I want to hope that you're seeing the way I'm arranging them so that it is not a big deal for you, because some of you did funny things. Some of you did very funny things with your numbers and the arrangement. Yeah? Some of you did very funny things. Good. The next item there, business rates. Business rates. Business rates. What is the amount of business rates? 7,500, right? You write it there, 7,500. Is it affected by additional information? Kindly go through the additional information. It is affected. And we have been told that business rates were prepaid. They were prepaid by 1,500. So what do we do? What do we do? What do we do? We less. Thank you. So again, we less, just like the one that we have already done for insurance premium. We less 1,500 to get an amount here. Again, get an amount there of 6,000. Right? This is where the rubber meets the road. We are good dealing with additional information. This is the thing that you'll do up to 4th year. We will just keep on increasing and tuning this additional information to be a little bit difficult for you, right? But it is bound to continue. I told you the format for P&L will never change. The format for balance sheet will not change. It will remain the same, but the adjustments are what keeps on changing. The adjustments and the details keeps on changing. Good, so we continue. Then from there we have depreciation. Depreciation. And in depreciation we have what assets? We said that majorly it is a fixed asset that are affected. And in fixed asset, if you look at your trial balance, you realize that we have two types of fixed asset. One, we have fixtures and fittings, and then we have warehouse, shop, and office, right? Are they affected by the additional information? Are they affected by additional information? Yes. And therefore, we'll need to calculate the amount of depreciation. And therefore, I want you to be keen here. We've been told to depreciate fixtures by what percentage? By 5%, right? By 5%. And therefore, this is what we have. Let me put this here so that we are able to follow closely. I want to put that there deliberately so that you know how to deal with it. I want to put that there deliberately. And if you allow me, I should have added a third column there. Insert a column, right? So that this one will be for calculation. For fixtures, we've been told that it is 5%, right? And for warehouse, we've been told that it is 10%. Therefore, what you need to establish, what was the cost of these equipments? What was the cost of those equipments? What was the cost of the equipment? For warehouse, it is 210,000, right? We prepare this and do it accordingly. And for fixtures and fittings, 12,800. True or false? Therefore, the value of depreciation will be 10% here of 10% multiplied by 210,000 to get what? 21,000, right? To get 21,000. Here, for fixtures and fittings, the value will be 5%, right? Multiplied by 12,800 to get what? 640. And therefore, the net book value here that should be carried there should be equal to the cost of the equipment minus the depreciation, which is 189. This will go to the balance sheet as the new value for that asset. It will go to the balance sheet as the new value for that asset. And then here, the new value for Fixtures and fitting will be 12,800 minus 640. And therefore we have 12,160. Now, listen here. These amounts will go to the balance sheet as new items or new values for the non-current assets that we have. But these items for depreciation, the amount of depreciation must go, because that is the amount by which our assets have depreciated in value. And therefore, these amounts here must go to the trading profit and loss as expenses. And therefore, here we have fixtures. We have seen it is 640. And depreciation on warehousing, we have seen it is 21,000. So this gives a total of 21,640. 21,640. I hope that is clear. I hope that is clear. I've said that this net book value amount will go to the balance sheet as the new amount for those assets. So when we will be preparing the balance sheet, these are the numbers that we'll use for warehouse, and this is the number that we'll use for fixtures, and not the original numbers, because we are assuming that this asset has depreciated in value. It has depreciated in value. Good. That gives a 21,640. The next expense is discount allowed. Discount allowed, what was the amount? Discount allowed 600. Is it affected by any other? Is it affected by any other additional information? No. Not affected by additional information. So 600. We proceed. Telephone. Telephone, what was the amount? 2,100. Is it affected by any other? 2,100. Is it affected by any other information? No. Continue. Stationery. Stationery. 6,200. Thank you, Martin. Is it affected by any other additional information? So 6,200. The next item is bad debts. And the bad debts, we get them from that additional information, right? What have we been told? That bad and doubtful debts should be provided at 10%. Now, if you remember what I said, what did I say concerning bad and doubtful debts? Where do we subtract them from? Where do we subtract them from? Where should we subtract them from? Where should we subtract them from? Yes, from debtors. And therefore, bad and doubtful debts will be 10%, 10% multiplied by debtors. What was the amount of debtors? What was the amount of debtors? What is the amount of debtors in the trial balance? Is the amount of debtors in the trial balance 13,000. So that multiplied by 13,000, you'll be able to get what? 1,300. True or false? So that comes there, 1,300. Is there any expense that we have not included there? Any expense not included? Kindly scan through and tell me whether we have forgotten any other expense. Fast, be fast, be fast. Be fast, very fast. We have not forgotten, eh? That should be all, eh? And therefore, here I'll come and add all this, right? I will add all of that, and to get what, 105 340, right? Is that what you're getting? 105, 340. And therefore, my net profit will be equal to 112, 200 minus 105, 340. That will be my net profit. That will be my net profit. I hope that is clear. I hope that that is clear. I hope it is clear. Crystal clear. Thank you, Martin. Vario, Manuel, Attica. Now, before we proceed, something that I've forgotten: when you are creating bad debts, here, minute, I show you something. When you're creating bad debts here, we start by saying they are debtors, right? And the data amount was 13,000, right? And then we create bad debts for us. This is debts, bad debts, bad and doubtful debts, bad and doubtful debts, right? Which we've calculated that way, right? And therefore, you expect that we'll subtract them from the debtors, right? Right? So here, this amount for bad debts will go to P and L. P and L. It will go to P and L. P and L. And this amount, which is new balance here, yeah, will go to the balance sheet as our new balance for debtors. It will go to the balance sheet as a new balance for debtors. Therefore, it is important for you to note that. Having prepared that, we go and prepare the balance sheet, right? And in preparation, I hope you've already written this. Sure to write that. And ensure that here, this is what is here, non-current assets, or you can call them fixed assets. And then we have one column for cost. We have another one there for depreciation, another one for net book value. And these are the same items that we have calculated here. If you key, these are the items that you come and you put there, right? And therefore, the new book value, as you can see, becomes that. New book values becomes that, but it is important for you to show these workings. Alternatively, and I forgot to say this, you can do the workings separately. If you look at the trading profit and loss account, we did workings within here as we were calculating, right? If there are not many adjustments, then they can be done here, right? But if we have several adjustments, then you can make them separately. So we proceed and do this. 189. So current assets. Let us record the current assets. We record the current assets. What current assets do we have? Current assets. Somebody to give me the current assets. Current assets. Or for the sorry. I just copied that and forgot to adjust as at that 1st December. And this is the balance sheet. I've just copied those and from up there, forgotten to. So that should be the heading. It should be the heading. So cash, we have 500. You can record it there. second column. Next, remember what we said about the prepayments when I was explaining. Remember we saying that the prepayment should come here? You remember that? We say that prepayments, anything that has been paid in advance must be recorded under the current assets in the balance sheet. So what was the amount of prepaid insurance? Amount 900, thank you. What was the amount for prepaid business rates? What was the amount for prepaid business rates? 1500, thank you. What is the amount for debtors? What is the amount for debtors? Here I said you must be able to work it out either there or separately, and you show the working. Let me do this separately so that now, if I had listed this as my workings, for example, I want to show you something. Because now in accounting, you must be able to show clearly your workings. So this was supposed to be working one, and this is supposed to be working number two, right? And therefore, if I have done separately, I can just come and record the amounts here without this, right? I can record the amounts without that. And here, I'll call this, I'll come there and include working number one, right? This is still on. I can increase here, this is number two, and call this number three, right? And therefore here, I will come and say this under working number two, right? And then when I come to debtors, it will be under working number three, because this is where I will, when you tell me that, then I'll come here and see how you worked it out. So working number three, right? And the amount is 11,700. Is that clear? I hope it is clear. Those two distinct methods. The first one, you can decide to do the workings here. For the purposes of the balance sheet, for example, in this case, it might be simpler. It might be simpler if you just do the workings in there instead of saying working one and working two. Okay? But if you don't want to datify your balance sheet, then you can do the workings separately. The same case for debtors. You can decide, instead of doing it separately, you just come and do it here and say this will be equal to 13,000 minus 10% of 13,000, right? Put it in brackets, right? See that? It should give you the same amount there. So I'm saying you can either do the workings here or do them separately and indicate the numbers, but don't apply both. Choose one. For now, I would prefer if they are done within the financial statements. I would prefer if you do them within the financial statements, the way we have done here, the way we have done there, right? I hope that is clear. Stock. What is the amount of stock? Amount of stock. What is the amount of stock? What is the amount of stock? 120,600 or 102,500? Amount of stock? 102,500. Good. Now, I know there is a format that I used for balance sheet the other time, and some of you started complaining, some were confused, right? For the purposes of clarity, we usually say, what is usually the accounting equation? Accounting equation? What is the accounting equation? What is the accounting equation? What is the accounting equation? Assets is equals to liability plus capital, capital plus liability, right? Good. Now I want to demonstrate that here. I want us to use that same the equation that you are a conversant with. Otherwise, I might decide even to say that asset minus liability should be equal to capital. True or false? You see that? I can decide to put it that way, which is still true. But now, for the purposes of those of us who don't, who takes time to understand this, you can decide to add this, get 117,100, right? And then you add them to the amount that you had gotten here for the current assets, right? To get a figure there, which I will call total assets, which I will call total assets. So I have dealt with the A part here. I have dealt with the asset part. And therefore, I go to the next. The next one is financed by, and here we record capital. So what was the capital? What was the amount of capital? Amount of capital from the information that you have in the TB. Amount of capital. What was the amount of capital from the information in the TB? 287,500, right? You can put it there. Net profit, we've gotten here 6860, if I'm not wrong, 6860, right? We had drawings. What is the amount of drawings from the TB? Amount of drawings from the TB? Amount of drawings from the TB, it is 26,000, right? 26,000, you less, right? If you less, you will get 268,360. 268,360. You come and record it in the third column, right? And then you go to the liabilities. In liabilities, we have creditors. What was the amount for creditors? Amount for creditors? 18,700. It's not being affected by anything in the additional information. Then we have bank overdraft. The amount was 30. Kindly establish that from your TB. And then you remember what we said about the accrued. If you go back to where we started today, we dealt with both prepaid and accrued. And we said that accrued must also feature in balance sheet as liabilities. And therefore, accrued electricity was 700. Kindly confirm that. The accrued electricity was 700 from the additional information. And then we have accrued advertising expenses. What was the amount? Accrued advertising expenses, what was the amount? 500. Any other thing that you have left out as a liability or capital or asset? Kindly confirm. Any other thing? No, and therefore you can add up this. You get 49,900 49,900. And therefore, if you add that to capital, you should be able to get 318,260. 318,260. And this one should have double lines, and that is what we said. And the other one here should be having double line, because what this means is that the total assets, which is A there, should be the same as capital plus liabilities. Can you see that? Which total again is 318. That assets should be equal to capital plus liabilities. Is it clear? Or is there any question? What about cash in till? Didn't we record cash in till? My friend, Otengo Victor, this is here. Cash in till, 500. What is wrong? Or you wanted me to write it in full, cash in till? Otengo Victor. Is it clear, Otengo? Anything that you think we have not addressed there? You love it. Very clear. Thank you. Thank you, sir. Thank you, sir. Oyunge. I want any question now. I want any question. Any question on this? Iko fiti. I always tell you that accounting is very interesting, especially if you have bright students. People who do their assignment well and who are keen to learn. The best student, become student, BAF student, BEd accounting. Very serious students. Yes, Deborah, it is the same. Whatever you call it, cash in till or cash in hand, the same. The same. Oh, you can see my work. Yeah? Can you see my work? Nicely arranged, right? And therefore, I don't expect anything less than this from you people. Neat and to the point. I didn't even have to do it twice to confirm the balances. You do it correctly, title, indicate the denomination, whether it is Kenya shillings or the currency, whether it is KES or dollars. Ensure that these items are well, no, you get them well, right? Ensure that you get them well and you label them well. Now, if you do it that way, that is 20 marks, right? 20 marks without even subtracting one. But it is okay. It is okay, Duncan. It is okay. This bit was only taking care of this. Yeah, it was only taking care of this part. Don't. When it comes now under current asset, it is a different thing. It was meant to take care of the non-current assets. Ni ukweli James, lazima niwapeleke na Rieng. Ni watu wangu. You must understand these things. So Duncan, I hope that is clear. Majorly, cargo, majorly it is the long-term assets, long-term loans, sorry, long-term loans. Otherwise, there is no major, and that's why most of the time, we don't even put it there, right? Yeah, unless it was already, you already been told that it is an current asset, non-current liability, you usually don't even put it there. Just include them in the liability without subdividing them. It is all right. Can you please list some items that should not be in the trial balance? What items should not be in the trial balance? That question is not clear. Telephone what? We didn't include telephone. Amma, what telephone are you talking about? We failed to include telephone. Did we? Did we fail to include telephone? Martin is asking a question and I'm not getting the question. Telephone is there, 2100. This one here, Martin, are you able to see it? Everything is okay, we included. Yeah, I can see it. No, Virginia, these things are outside. They are outside. That's why we are saying you are adjusting. They are outside the trial balance. That's why you are calling them adjustments. They cannot be included in the trial balance. Come on. They cannot be included in the trial balance. They always be, you look at that question, or you came late to class. Illustration number 4, you can see the trial balance first, right? Or the balances, and then down there you've been told additional information. So that means they are not included in the trial balance. Somebody is asking that we share there. Till the end. I hope that is clear. And I'm not sure whether I need to do any other example. Debentures are long-term loans. Cargo. Debentures, long-term loans. Simply that. T example mutaipata kwa notes. It's classwork. Can you see it there? You're supposed to do it in class. Bills payable, that is a liability. Bills receivable is an asset. These things, brother, you've not read my notes. If you read my notes, I gave out all this and told you whether it is an asset or a liability. Hey, Duncan. Oh, my friend, you think that is an how do I put this? Duncan is thinking that the telephone that is listed there is the gadget. No, it is not the gadget, Duncan. It is not the gadget. It is the expenses. If they list a gadget there, then they'll tell you it is a gadget, right? If it is not written, count it as an expenses. I hope that is clear. Hey, they're coming fast and thick. The balance sheet is shared. Who is the next? I've already talked about provision. I don't want to repeat. Bad debts written off. Do we have bad debts written off in this example? No, we don't. We have, so when provided with a trial balance and the requirement is to extract trading profit and loss from it. How do you identify that the value given, for example, if we are dealing with the return inward and outward, is return inward on the credit side? Now, Etonga, this is already given. I told you. It is in your notes. Can you go and read notes where we were dealing with other entries? Yeah, we are dealing with those ledgers. I give a very good. Let me look for it so that I share it here, so that I demonstrate to you that you people sometimes you don't read my notes. You don't. You don't. Let me see. It must be somewhere. I cannot forget these things. I can't. Even if I try, I will not forget them. Hmm? What about bad debts written off? We've already dealt with that, my friend. For some of you, let me see. You must have dealt with these things. Let me see. Is it ledgers? Or was it the trial balance? Was it ledgers or the trial balance? Let me see. Let me look for that information. I know it is somewhere. I want to answer Jacqueline and the rest of you who keep on repeating this. They are not sure. Let me share this. Jacqueline, I hope you are not far now. I want to share something. Can you see what I've shared now? Jacqueline, can you see this? The rules of a trial balance. These things are written here. All assets, expenses, losses, drawings must be put on the debit side of a trial balance. And I've included here anything relating to stock purchases, return inwards or sales return are debited. These things are here. They are there. And this other one, return out, should be on credit. We went through this, and again, I sent the notes. So when you tell me that you cannot find them and they are not clear, I am not sure what you want me to conclude. Because I can have my own conclusion, right? I can have my own conclusion, which is not good. Let me see others. Let me see what others have said. Those things are there. I cannot. Huh? What about bad debts written off? We don't have bad debts written off there. And we said if they are written off, then it is an expense. You put it in the expenses in the trading profit and loss account. I assume, Victor, that you came late. I explained this. And this example to note, sir, it will be there. Please, sir, I didn't receive the quiz in my profile. Which quiz? Which quiz is this? Motua. Do we have a quiz? For reference, please send examples. Send the example on WhatsApp. Ah, no, surely. No, I sent the questions on WhatsApp. I don't want to accept. I cannot send it there. You know how to save it. Once it is in the portal, then you are able to download the notes. With that, Duncan, you should be good, right? Then the register, note that. Gitonga. At least I've known that a part of liability. Are you marking the register? Or I will give you a direction on the register. I want you to mark it again today. But now, unfortunately, there are those people who are not on, who are not able to access the portal. And those are the people who should contact me. No, rahisi sana tukifanya pamoja. Ni rahisi sana. Mirwani, I agree. But when you are alone, it becomes a mountain. When you're doing it together, it is a small hill. Gitonga, return inwards. Sorry. You should mark the register yourself. See what tunaweza access portal. And then where are we supposed to put bad debts written off? I've already said this. Expenses, trading profit and loss account. In normal balance, how many columns should we use in vertical format? In the normal balance, what is the normal balance? Oh my, can't get that. Mutua, I'm not getting you. How do we get the results of the cut? They are in the system. When you click on the cut, you should be able to get the results there. Kuna portal, ziko na shida. I agree, really. My cut is not graded. How is it going? Nipeleke na Rieng. Davis Mwangi, I mentioned that I'm not through with marking. And this is because I realized that some of you copied. You know, one person did send to the other one, and the other one copied, and you say copied the same, forwarded the same picture. And when it comes to that, then I will have to give those two people a 0. Right? That's what we agreed, because it is unfair. So what group did you send the practice question? Sikupata. Jeremiah Ongeri. You are in the group that never read the WhatsApps. I sent in WhatsApp best, BAF, become, and BEd. I sent in all those groups. Finishing marking within by Wednesday should be through. Now, good. I want those people who are able to mark the register. A minute. Let me stop this share. I want those people who are able to mark the register to do it. A minute, I confirm something here. To confirm something here. I want to open up the register because I think I will not continue with the teaching right now for obvious reasons. Don't want to confuse you further. But amongst the example, I sent 4 illustrations, right? I want you to practice with them. Practice with them. I'll be sending, when you encounter difficulties, you can consult me. But before you consult me, ensure that you do some research. No, use Google. Look at how we treat these items. Every information is there. You're able to get it there. So not all questions should be referred to me, right? There are some that you can check on your own from Google, right? There are some that you can ask your friends. It will ensure that we are efficient so that I don't have so many things that will prevent me even from marking. My friends, is that clear? I hope it is, because this is my best class. Now I want to enable you so that you are able to mark the register for today, right? Only for today. And let me see. I want to enable you mark register for today. We still have time. And something else that is very important. If you are told to mark the register, you do it immediately, because if you wait, And probably I've given you 10 minutes. Once those 10 minutes elapses, you cannot be able to mark it. Some of you come as late as the next day. Sir, you told us to mark the register and I'm not able to mark it. I wonder how we can help you if you are that sort of a person. So if you are requested to mark the register, probably you're given only 20 minutes to ensure that it is marked. After 20 minutes, you are not able to mark it. It closes. Ndonye. Oh, that is Ndonye. Good. Can you confirm now whether you are able to mark it from your side? Very fast. Confirm and mark. In case you are not able to mark, you tell me now. And those people who are not able to mark, they have my WhatsApp. Or they can put their numbers somewhere here. Put your numbers here in the Zoom group. Put it in the Zoom group. I should be able to assist you to mark. But if you're able to mark, do it, because there is something. I always tell you, I've never told you to mark that register. I've always marked it. But when I request you, it is because there is something that I want to do. There is something that I'm researching on here I want to know. Right? So if I tell you to do it, you do it. Unless now you're not able to do it, you're not in the portal, then I should be able to assist you. I've already talked about bad debts written off. Don't want to repeat that. When those people who cannot access the portal, Mwangi, I said you drop your admission numbers here. Best what, buff what. Sawa. Right on, thanks. Group, did you send the practice questions? Sikupata au watakwambia ni wapi? About the register, sikupata. Condition. Ndonye, you're a joker. I said, unless you are not able to mark, you can put it there. Give me a minute. No, half of you cannot tell me that you're not able to mark. Can you mark? Register, mwache mchezo. Mark the register, mwache mchezo mingi. Mark the register. I hope it, yeah, good. At least I can see some of you have updated. Watu wa BAF, mwache mchezo. BAF are jokers. So many of you putting your numbers here. Last you gave us a chance to mark register, but my phone went off before I marked. My friend. You BAF are too many who have not marked the register. What do you expect me to do? You cannot lose them, Millicent. How many times do I repeat that? You cannot lose the data. You cannot delete the data that we have. You can't. Just sort out the system. Your issue is the system access. Sort out that. You should be able to find your information there. And you created them. But since the portal was updated, as for me, I'm saying I did not attempt the assignment. It is saying you did not attempt the assignment. Yes. Mambo inaenda sawa. Thank you. 0079. Hey, Purity, Nzomo, what is your registration number? You're saying 042, and somebody else has given 042. Atoms Randy, 042. Bath. Nzomo Purity, 042. Bath. What is wrong with you people? Gideon, if you have a problem, post your number here very fast. If you've not been able to mark the register, or if you are not able to access the portal and mark the register, can you send your admission number there? But Zomo Purity and who else? Zomo Purity and Aradi. Is it Aradi? Randy. Randy Atoms. You should be able to sort out who has Bath and who is Bath and who is the other, because all of you have given me Bath and it is the same 0042, 0042. Who is Bath, who is Bess, or are you the same one and the same person? Are you one and the same person? Zomo. I hope not. Good. If there is nothing else, we can call it a day. Ensure that you do a lot of practice. I'm not going back there, right? Ensure that you do a lot of practice because I'm not going back there. When you encounter problems, we said that always ensure that you research on them, consult your colleagues, and if they're not able to sort it out, then I should be able to sort it out. Yeah, I will sort that out. Then cannot you can't remember doing cut one. My friend, be in for it. Now, that marks the end of my presentation and our lesson today. Enjoy your evening. Thank you.